Welcome to ForexTV.com. Today's Wednesday, April 8th. I'm Tim Kelly with your New York Forex Market Buzz. U.S. equity markets are pushing higher in afternoon trade. Crude oil and gold slightly higher, and the dollar is weaker against the yen. Now for a look at the headlines making news today. U.S. wholesale inventories continue their downward trend in February, falling 1.5% to mark the sixth consecutive month of declines. Economists had expected a 0.7% decline and following a 0.9% contraction in January, that according to the Department of Commerce on Wednesday. Mortgage applications surged in the week ending April 3rd. Weekly mortgage applications in the United States advanced for the fifth week in a row in the week ending April 3rd, that according to data released from the Mortgage Bankers Association, or the MBA, on Wednesday, which reported a 4.7% week-over-week increase in applications. Previous week's applications were up 3%. Department of Energy inventory is mostly in line with expectations. The Department of Energy reported that crude oil inventories rose by 1.645 million barrels for the week ending April 3rd, relatively in line with a consensus of 1.5 million barrels. Gasoline inventories also on the rise, showing a build of 656,000 barrels, higher than the consensus expectation for a withdrawal of 1.4 million barrels. Up in Canada, housing starts unexpectedly rise in March. The pace of new housing starts in Canada climbed to a seasonally adjusted rate of 154,700 in March after coming in at 136,100 in February, that according to the Canada Mortgage and Housing Corporation. Today we're joined by Peter Watkins, Senior Foreign Exchange Analyst at Thomson Reuters. Peter, welcome to the program.
Hi, how are you?
I'm doing very well. Well, Peter, you continually keep me informed and amused in your briefs throughout the day. I want to start off with something you're talking about today, which is a expectation perhaps from the cyclical folks of maybe a cyclical trend in the next week that, according to you, is not showing up for the party.
That's true. We are very close to a very important fund that manage a substantial amount of money, $14 billion plus, which they put to work in the foreign exchange markets, and they leverage that. And their view has been that we are going to see a currency peak either April 13th or April 20th. And we've been looking for that to show up. It's certainly been there in currencies like the Australian dollar. But we've been looking for similar in the euro, and it just is struggling on rallies. We're starting to wonder here whether in fact the cycle that they are looking for is possibly getting pulled back a bit. Perhaps their cycle could be off for a week or so, and we're starting to feel that we're probably not going to see the 138 level that they were looking for as a peak for this currency cycle for the euro.
Well, Peter, right now, we're stuck at the figure here, trading a little bit heavy at the figure. Can't seem to get above it. Getting help from the equity markets and actually other markets. What do you see short term? Any insight in the next week? We've got a shortened week this week for the holiday, the Easter holiday. The markets here in the U.S. are closed for Good Friday. What's your take here? We're going to make this figure here, or we're going to sit pat?
Well, even if we make the figure here, it's really not a big figure, if you pardon the pun. It's 133. We've traded back and forth through so many times now that it's now become irrelevant. The big numbers are probably 131 on the downside. Certainly 130 is a huge number. On the top side, I think we've got to get above 135 and a quarter before we've got any serious damage. There is a short-term resistance line at 133.15, which seems to be holding the euro back at the moment. And I don't know how familiar our listeners are to the technicals, but they're one of the popular measurements of overbought and oversold are Bollinger Bands, and on the hourly studies, the 24-hour moving average is overbought at around about that same 133.15 level as well. So I think it's struggling from the fact that, number one, it's not been rallying well over the last several weeks, and number two, it's technically overbought after being oversold this morning.
Okay, so you mentioned some of the commodity currencies just before. Why don't we shift our focus over to loonie, and why don't you give us your lay of the land there?
Well, unfortunately, the Canada is probably suffering the most out of this holiday hangover at the moment. Everybody I talk to tells me that they're focusing on the fact that we've got the Easter holidays with Canada closed on Friday, plus we've got Passover and we've got spring break in the States. So there's not an awful lot of impetus to do much, particularly as dollar Canada has been stuck in this 123, 124 and a half area for the last couple of days, and on a wider basis we've been 122 to 127 for several weeks. On a longer term basis, the wide range is 120 to 130. What we are starting to see is a building bid in dollar Canada. Corporates who were originally hoping to buy dollars down below 120 are shifting up their bids to the 121 and 3/4, 122 area. The offers don't come in until 125, and they're not particularly thick. So I think we're still stuck in a range, unfortunately. The loonie's been left behind, whereas currencies like the Aussie have ripped away. Dollar Canada, I think, is stuck because of its association with the U.S., and 80% of its exports heading this way.
Right. Now, Peter, as far as Aussie, you think that's still got legs at the 71 level here?
Well, it's getting a little expensive. I was one time the chief dealer and then treasurer of an Australian bank, and the one thing we loved to do was sell the Oz. It's been hard certainly, but I think that if you look at where Aussie's been over the last few months, certainly 71 is a little expensive for the last few weeks, and we only really got up to 72.65 at the January highs. So I suspect that if we get into the 72 to 72 and a half level, you're going to see people want to fade this rally, and at some point people are going to question this whole view that commodities have to keep strengthening, particularly if we start to see the U.S. equity market give back some ground, as recent industry reports have suggested.
Yes, that's right. Well, we're data check, just S&P at 826 seems to be a pivot there, or 820 actually. So from that perspective, perhaps we've got to wait and see for next week, unless we see something in the next the next couple of hours and tomorrow. Peter, I want to finish up with yen. We've been jumping back and forth this parity level here, and get your thoughts there. Shifting from the land of Oz over into
the land of the rising sun.
Land of the rising sun.
I think that the yen's very interesting. It is a primary driver at the moment. One of the reasons we're getting subdued movements in the other currencies is there's a lot of cross-currency movement. Big driver in the loonie lately has been CAD yen, and that has really been flipping back and forth with the equity markets. Dollar yen at 101 seems to be struggling. The cycle gurus were looking for 102 as a peak in that, and it looked like the market got a little ahead of them and sold at 101 and a half. I would be surprised in the short term to see dollar yen press much higher than 102 without getting follow through from U.S. equity markets. And the key here for everything is going to be, can the U.S. equity markets hold in, or do they have to pull back so they can rally later in the year?
Right. Well, listen, Peter, I think we're going to leave it there, but I appreciate your insights. Appreciate you spending some time with us today. I know you're pretty busy writing that article. Keep it coming. I enjoy reading it.
Well, it's a pleasure talking to you again, mate.
Always a pleasure on this side. This has been your New York Forex Market Buzz with, with Peter Watkins of Thomson Reuters. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.